and know Jeanette very well. So great to be here. Hope you've enjoyed all the other speakers. And yes, we have pivoted. I'm the most off-script, unpredictable speaker you can probably put on the mic, which gives Jeanette headaches. But off we go. I want what we talk about to be highly of value. I want it to be highly relevant. So I didn't want to speak about, talking about, blah, blah, blah insiders, because while that's incredibly valuable, what you need to know about today, I think, is what's going on right now. Who'd agree with that? Give me a 1 in the chat box if you're ready to talk about what's going on right now. And if there's any Acorn members in the room, didn't we call it? Yeah, I'm going to show you how we actually called this earlier this week. Now, we didn't know it was going to be the coronavirus 3.0, as Hubert said earlier, but we did tell people 2 weeks ago that we were not taking any new long positions, locking in our profit, protecting our capital, taking profits off the table. And on Monday of this week, I said there's no way in God's green earth I'm taking a single long position in this market right now, because this looks like November 2019. Amazing that this has happened today, because that's pretty damn exciting that this is working again the way it has for us all these other times. I'm going to talk about why. So let's dive into it. Quick risk disclaimer: this is for educational purposes only, and not a recommendation to buy or sell any of the securities discussed. Acorn Wealth and Smart Money Trading are not financial advisors in any jurisdictional province. Any positions discussed, and there will be many that we talk about today, are being held by myself or the contractors, employees, and traders of Acorn Wealth Corp, or positions we may be intending to take soon. But again, trading options and stocks involves any risk of any capital that you invest, so always be aware of that. So let's dive on into the this market, and I'm going to just again fast forward through some of the slides here, because we've got a lot to cover. But so I won't go over the long introduction of who I am and where I came from, but 10-second overview. I started in the markets when I was 16. It's been my lifelong passion. I worked in the video store for 3 months. That was my first job. My second job was the market. I've done nothing else. It's always been my passion, and I love trading, and I love investing, because it's this awesome puzzle, where I explain it to my students like it's a jigsaw puzzle, where each piece fits into the next one. It fits into the next one, and it creates a picture. And if you put those puzzle pieces together, and you get it right, it's the best jigsaw puzzle ever, because you make money from it. And it's something, if you do well, it can support you through your life, or add to your life, and retirement, and all those kinds of things, which are all pretty amazing. I think we have an incredibly unique service, because there's no one out there that does things the way we do, like this. And Harvey Beek, a little email I wanted to share with you based on the market movements we've had recently. He said to me in an email recently that he feels we have the most unique service that he found in over 40 years, looking for help in sorting out markets. I always look forward to your observations and treasure your perspective. Please don't stop. Your warnings earlier this year probably saved me thousands of dollars. What's Harvey talking about? Well, Harvey's talking about all the warnings that we've provided in the previous crashes. And if there's one thing that I think we do incredibly well, it's been tracking the patterns and the smart money movements in the market since we started in 2007, because there hasn't been a crash we've missed. And there's few people that can say that. Hubert was talking about Michael Burry earlier on. Those of you who were in here earlier, and he's awesome, of course. Love Hubert. But that's something that we have up our sleeve. Every single major crash since 2007 is something that we have called, and it's not because we're as smart as Michael Burry, but it's because we follow the systems that track smart investors like Michael Burry, and we have a way of pinpointing when those major market moves are about to happen. And that's all about having a smart money system. And so that's what we do. We have a smart money system, which is incredibly powerful, because it tracks the insiders and the smart money and the bond market and all of that into a very simple 3-step process. But then it combines it with execution, because you can't have one without the other. You can't have a great idea or great research without the execution piece of when to get in, when to get out, where to put your stop losses in case you're wrong, because you're not going to be right 100% of the time, right? And those two things combined, being able to track the smart money and be able to execute it at the right time, is something that that we do incredibly well. So let's dive into the market. Let's jump into that. Jim says you called it. Yes, Tom, you called it. Thank you. Yeah, and I'm going to show you how. So firstly, let's talk about the pattern. And what I'm going to do is I'm going to use this as an opportunity to not just talk about the live markets, but also show you how this happened before. So we've had some pretty big moves in the market over the last 10 years. And if we want to go back to kind of when Acorn was born, Acorn was started in November of 2007. Myself, Dave Nicholson, and Strath Curtis were the three amigos that started Acorn almost, 15 years ago now. And so in year one of Acorn, we're like, right, we're going to go out, we're going to change the world. That was why I started Acorn. I wanted to create a really unique learning experience that would be known as one of the best companies out there. That was kind of one of my motivations. I love building businesses, but more than that, I like being the best at something. When I was a kid, I asked my dad, what should I be when I grow up? How do I be Bill Gates? And Dad said, there's only one Bill Gates. I'm like, well, there's only one John Seville. So what can I be best at? And so Acorn for me is my opportunity to be best at something. I want to be a part of your arsenal, and I want you to be able to say, hey, Acorn's one of the best out there. And so, when we first started Acorn, we were gung-ho, we're going into the market, and then all of a sudden, boom, 2008 happened, right? Which could have been what made or broke that dream. Fortunately, we were tracking these systems I'm going to share with you now, and for our first year in business, our first market call was that we felt the market was going to crash. First market call in this new company we just started was we think the whole market is going to crash and we think we should sell everything. And we did. We sold everything except a company called Western Potash, WPX, if you remember that symbol. I'm not even sure if it's around still today, but that was during the potash boom. It's the only company we held on to. We got rid of everything else and the market crashed. Why? Well, if you look at 2008, the pattern was something called a inverted fallen angel. And it's very simple. I don't want you to get bogged down in the technical terms today, because if you do decide to join us at the end of today, these are things that you'll become very comfortable with and familiar with over the course of working with us. So don't let these hold you back. But I do want you to understand that this is one of the most powerful bearish momentum patterns that exists. And it's simply when you get an upward channel, right, to start with. And what we should know together, and if you don't, here's a chance to learn it, an upward channel is bearish. When you get an upward channel, typically after 3 touches along support, it breaks down. So by the time you see an upward channel, by the time it's bounced enough for you to even be able to reliably recognize it, it's already time to go short, right? And that's why an upward channel isn't bullish, because by the time you see it, it's time to short it. Upward channels are bearish, but what happens in the case of this inverted fallen angel is the upward channel breaks up instead of where it should go, which is down. And what this does is it traps investors into trading the bubble. Now you can trade the bubble, but you have to do so knowing that it's about to pop, and that these should be short-term positions only, where you're protecting that capital quite tightly and taking profits in that bubble. That's what it is. That's a bubble on top of the channel, and that's what's basically called an upside down fallen angel. This is a pattern that I have specialized in for 23 years. It is very specific to Acorn, and it was actually the only pattern we traded for the first 5 years of the company, in fact, because it's that good. So when we see this in a bullish way or a bearish way, That's a big sell signal. And that's what we saw in 2008. Now, 2018, we had another major flash crash. We had in October 2018, or the end of September technically, you had this other system, which I've just touched on, which was an upward channel. So there was your big, broad upward channel. And then inside that was a smaller upward channel. So it doesn't get more textbook than this, right? The charts are literally singing to you. They're telling you what to do. And that's again, it's a jigsaw puzzle. If you know what to listen to, if you know what to look for, let the chart tell you what to do and get rid of all that emotion that gets in the way. Get rid of yourself that gets in the way. That's the biggest obstacle, right? If we can get rid of that and we can listen to the rules were telling us as crystal clear as they could to short the market in October 2018. That was actually the largest short position I've ever taken in my life. Well, at that time anyway, was shorting the market right here. Why? Because it was textbook perfect. Two upward channels meeting at the same point, and those upward channels suggested that the S&P, the S&P was going to drop to here. That was the measurement of the first upward channel. That's exactly where it dropped, and then it bounced. And we had to ask, is that it? Is that the end of the drop, or is there more? Well, then we looked at the broader upward channel that it was in, and that told us that no, this is not it. It's actually going to drop that much more. So let's hold on to our shorts. Let's really make some money from this move. And as you can see, it dropped exactly down to where that target was too. Chaotic market, I would argue differently. I would say it's organized chaos. And the reason why this is so accurate and so predictable isn't because we have a crystal ball. It's because in today's era, 90% of the volume in the market comes from algorithms. So when you see dramatic moves in the markets up and down and so forth, they're often pre-programmed exactly where they're getting in and out. And when the algorithms account for 90% of the daily volume, they're in charge. So it's pretty fascinating how often these big moves are dictated by the patterns, and the fundamentals and the news just come in to kind of to backstop it later. 2020 was the next major correction, the most recent one we've seen of substantial size. We've had other little ones recently, but this was the last really big one, of course, was 2020. And this, once again, Jeanette's been doing some awesome quizzes today, so I'm going to do one of my own. What pattern was there in 2020? At the end of 2019, going into 2020, I've already told you about this pattern. What pattern was there in 2020? Inverted fallen angel. That's exactly right. So when we go back to, I just want to show you again, side by side, so you can see how identical these are. That was the major, that was the global financial crisis. And the moment we broke above that upward channel, that was when Acorn had just started, and that was when we said a major crash is coming, watch for it, because of this simple pattern, right? I didn't know anything about price to earnings ratios at the time. I wasn't tracking the bond market. I wasn't even looking at insiders back then. I was just focusing on that pattern, and that was the most important knowledge I needed to have to make a pretty big call on the market. And that was the same reason why on December 16th of 2019, we told people the same call. 15 years later, we said, we expect there to be a 2008-like crash because everything is setting up exactly the same. So watch for this in the beginning of 2020. Again, we didn't know about COVID-19 at that point. All we knew was that the market, the algorithms, the data was showing us that the smart money was preparing to dump big time. And later we found out why. So there's 2020 for you, and a repeat of that type of system. So I show you this because I want you to see how often we get so caught up in the emotional journey of trying to outsmart the smart money and trying to out research the next guy or girl, when really, if you take away all the noise, and keep it simple, right? If you keep it simple and follow the rules, the answers are often staring us in the face if we listen to them and if we execute them. So who would agree with that? Because that was one of my biggest learning experiences when I was learning to trade, was I thought the more stuff I bought, the more research I did, the more computer monitors I had, the more TV screens on in the background, I thought I'd make more money. And it was the absolute opposite. The more I did, the less I made. And it wasn't until I got rid of all the noise and kept it simple and went back to the few simple things that moved the needle the most, profitability, that was when trading became fun again. That was when trading really became profitable. So these are some of the simple things. Now, let's go back to the pattern right now in the market. Here's the QQQs. Keep it simple, silly, right? Or as my girlfriend likes to call me, stupid. Anyway, yeah. So there's an upward channel right there on the QQQs. Can everyone see that? It's pretty clear as day, is it not? Right? So recently, I mentioned that there were some small little flash crashes that have happened recently versus the 2020 major crash we had. So what do you think we did when the QQQs rallied to the top of this channel in September, right? We also got a sell warning from our TradingView Smart Money Divergence Indicator, which is something we developed recently, which I love. What do you think we did when the QQQs rallied into resistance in a perfect upward channel recently? We sold. We told all of our students we felt that there was a minimum correction in the QQQs of there to there. This also aligned with some perfect shorts in Apple, Amazon, some other setups as well, but the QQQs were at a perfect shorting point. It could have gotten worse. It could have broken down to that target, but it did bounce off support and went higher. And as you can see, that's where we were as of yesterday's close, right up at that channel top again. Again, a technical point where a breakdown was ready to happen, and we saw that today. But we'll come back to that one, because what I want to move on to. But that is the first point. That's the first check in your process, is before anything else. If I'm making a trading decision, before even looking at what the company does and spending time reading anything, the first thing that I need to read is the chart. Is the chart screaming to me perfect setup? And if it's not, move on to one that is. And then when you find something that's screaming perfect setup, perfect rules, perfect risk reward, then spend a second or more on research, because you want to make sure it's the right time before you start diving down the rabbit hole of research, right? So patterns, very important. And the second part to this that I now want to talk about in this rule book, this playbook, is looking at what the real market's doing. I love this presentation. I haven't done it in quite a while because it's very technical heavy, but I think you guys can handle it, right? So what the real market is doing is an awesome way to see the truth behind all the noise, right? Because we get so caught up in noise, and the more the more I've worked in this industry, the more noise there is, right? There's so much news and noise and stuff out there to lead you astray. There's so many bright, shiny objects that it's easy to get lost. And even the market itself is full of noise and manipulation. And let's go back to the 2018 crash for a moment to illustrate this point. The 2018 crash, where we went heavily short by means of buying the SQQQ and TZA, which were inverted ETFs. I didn't short the market. I went long the inverted ETFs. That's how I went heavily short. So let's look at why we went short there. Well, During this period, the S&P 500 over 2018 had actually made a record high back in February, late January, early February. That was actually another call on the market we made that we felt a crash was coming in the second week of January. And then we made new record highs in October, where we got that really juicy and much more profitable short setup. How do we predict those? Well, beyond the pattern, there was another way that we were able to see that there was a high probability the market was ready to drop. And it comes back to this indicator. And this indicator is called stocks above their 50-day moving average. And what it does is it tracks the percentage of, it looks at the entire market and looks at how many stocks are in bullish trends versus bearish trends. How many stocks are above their 50-day key moving average and how many are not. Because this is one of the big takeaways from one of my mentors that changed the game for me. His name was Strathy, and he said to me, Johnny, there's no such thing as the stock market. It's a market of individual stocks. And this illustrates that point so well, because while the market was rallying to record highs going into October, the real stock market was doing something totally different. So take a look at this graph. So on the right-hand side, this is the percentage of stocks that are above their 50-day moving average. So what this means is in June of 2018, 70% of stocks were above their 50-day moving averages. 70% of stocks were above their 50-day moving averages. Essentially, that means in bullish momentum trends, right? And then it changed. In fact, this 70% number is very important. If you go back about, well, if you go back 20 years, you'll find that it's like 83% roughly. That might have changed in the last year because I haven't updated that data in about 12 months. But last time I checked, it was roughly around 80% of the time. The market reverses instantly within 1 week. Within 1 week of hitting 70%, that's the top of the market. And you can see that here, right? 1, 2, 3, 4, 5, 6 days, it spends above 70%, and then down we go. And this is also how we had predicted the January top. But you can see that back here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. It spent above the 70% level and then straight down. So both those crashes in 2018 began from the moment they hit that 70% threshold. But what's fascinating is, again, is compare this to the market, right? So stocks topped out in 2018 in June. By the time the S&P began to drop, you know, not already crashed, but by the day it started, individual stocks had already dropped from 72% being above their 50-day moving average to only 36%, right? On the day the S&P began to crash, almost 70% of stocks were already in deep bearish trends. Fascinating, isn't it? So when people talk about what the stock market's doing, it's often important to remind them and yourself that it's not a stock market. It's a market of individual stocks. So the stock market really had actually been declining and giving bearish signals since June, despite the S&P not beginning its crash in October. Does that make sense, guys? Give me a 1 if that's all. Again, it's very technical, and I want to make sure everyone's along for the journey right now. Give me a 1 if that's all making sense and I'm explaining it clearly enough. Right? You don't need to overcomplicate things. We just need to be able to find a way to see the truth. We could call this workshop today that, exactly, the journey for the truth. Because if we have the truth and we can rely on the truth, we can make decisions. I can make decisions if I feel I know the truth. What I hate is having the wool pulled over my eyes or being led astray by the BS media and all this garbage out there that's trying to lead you up the garden path. And this indicator tells us the truth. So again, this is actually about a 2-hour presentation, so I'm going to try and cut myself short on all my explanations. But 2020 is another great example. I just want to talk about this very quickly. 2020 is another great example of that, because when the S&P was setting up in that beautiful inverted fallen angel, it wasn't the only reason why we felt the market was due to crash, just like it wasn't the only reason why in 2018 that we felt it was going to crash due to the upward channels. It's when you have all these pieces falling in line at the same time that starts to build the perfect storm. And so on December 16th, 2019, look what happened. That was the day that this indicator also went above 70%. That was where the bearish pattern began. That was where this indicator gave us a sell signal. And once again, look at the leading factor of this. By the time the COVID crash began, we had already declined from 70% to 35% of stocks above their 50-day moving average before the crash happened. What this shows you is that by the time the market catches up, there's a period of time where the smart money already knows the truth. They already seen what's coming. They've already gotten out of that Titanic long before it starts to sink, right? So there's a graphical representation of that. Pretty fascinating stuff. And so if you again want to fast forward to one of the reasons why 2 weeks ago I warned all of our subscribers and students, clients, that we felt we were at a very high risk zone in the market. One of the factors contributing to that was, once again, where were we? At the beginning of, on the 10th of November, or a little bit earlier, 8th of November, 70%. And look what happened. We went directly down from there. I'd like to see very quickly where we closed, because as Jeanette mentioned, I am in Australia, so I didn't have a chance to see where we closed on that indicator, but I would imagine it was a fair bit lower than this screenshot. Yeah, so today we closed at 37%. 37%, we got as low as 35 today. So it feels like 2019 all over again. I'm not saying it's going to crash as badly as that, but when you start seeing all of the same signals setting up in the exact same way, you know, it's at least reason for caution. And by caution, protect your capital. The most important part of trading isn't making money. Sounds strange to say. The most important thing in trading is to protect your capital, because if your capital's protected, you can always live to fight another day. And so when we saw all these signs lining up 2 weeks ago, that was why we raised the big red flag with our students. But as I said, it's easy to get off track, because there are 1,000,001 things popping up in your cell phone, giving you notifications, coming across the media that is designed to get you to do the wrong thing at the wrong time. Let's fast forward on to the next part, which is the bond market. Part 3 of the Smart Money Rulebook that we teach you. And by the way, again, this is just a glimpse of how each of these things work, but the full training is on each of these systems, and how to use it is all included in the offer that I'm going to give you today. So stay seated, and that's going to be an offer you won't want to miss, given what's happening right now. So a quick glimpse of how this indicator works. Firstly, let me start off by saying that if you don't understand how the bond market works, don't worry. When you don't need to understand this indicator. In fact, for the first 10 years of my trading, I didn't look at bonds at all. I thought bonds were a type of underwear. Does anyone get that reference? You got to be bonds. It's a type of underwear that they have in Australia. Anyway, that's what I thought bonds were. But no, bond actually is, of course, a market that is much, much bigger than the stock market. The bond market could eat the stock market many, many times over and still be hungry. And the specific area of the bond market that I look at is high yield bonds. Another word for that is corporate junk bonds. Corporate junk bonds, so if the bond market likes the stock market, if the bond market thinks, hey, the market's tip top, this is a good place to take risk, we believe that corporate America is going to be in great shape and can pay back their debts. Well, if we believe that's true, let's lend money to corporate America. And the mechanism that the bond market does that through, or one mechanism they do it through, is through high yield bonds. And so again, if the bond market's bullish on the stock market, if they like the market, high yield bonds get bought and high yield bonds go up. Where this is what you're seeing here on the screen is HYG, high yield bonds. Simply put, it's a risk barometer of whether the bond market feels like taking risk in the stock market or not. In 2019, as we were leading up to that massive crash, can everybody see the pattern on high yield bonds? What pattern is it, guys? What pattern did we have on high yield bonds? A perfect version of it. An upward channel. That's right. And so the chart's talking to us. It's saying you have an upward channel. We turn the page. Okay, an upward channel is bearish. So what should we be doing? Preparing for a big drop in high yield bonds. And if high yield bonds are about to have a big drop, that is a very high probability leading signal on the stock market. And of course it did drop exactly to where its target was, rallied back into resistance, and that's where the real collapse happened afterwards. And this was a leading indicator that, again, in December, right at the end of December, on December 16th, we were right at resistance alongside those other indicators I've just shown you. Now, this was the chart. This was the chart that I shared the last time I did this presentation. The last time I warned people that I felt high yield bonds were gearing up for a nasty drop. So this was the date that I last did this. It was on July, looks like 16th, July 16th. The last time I did this presentation, I told people that I felt that this was the most bearish and most dangerous chart in the entire stock market. Can you see why? What pattern do you have here? A rising wedge. A rising wedge, like a rising channel, is bearish. And a rising wedge, again, even if you've never looked at this pattern ever before, even if all of this terminology is brand new to you today, don't worry about that, because these are things that you'll learn in the course that we teach. And I truly hope you take part in it, because it's a game changer. And so a rising wedge is bearish, and you measure the distance from the top to the bottom of the largest point, and that is where, to a high degree of probability, it's expected to go. That's what we had in July. So this was the screenshot that I was showing people the last time I did this presentation. And let's now fast forward to where we are today. Let's fast forward to where we are today. And I'm just going to make this chart really clean for you. And then I'll share it. There we go. So we broke down shortly after that last presentation I did in July. We broke through that support. We then formed this lovely little head and shoulder pattern as we broke down through support, which is also very bearish. And as you can see, we have continued to drop. We dropped down to the head and shoulder target, and today we broke even lower. So we're well on our way to that high yield bond, much more bearish target. And the fact is, and this is the scary part of today's move, is that despite the vertical nature of today's drop, down 2.69% on the S&P, and I think the Russell was down 3.77%. It's big in one day. But that's a drop in the ocean, because the distance that the high yield bonds are dropping, especially if they get to their full extent of the target, that has not been reflected in the amount the markets have dropped yet. So this bearishness in high yield bonds is actually a much deeper and more bearish warning. It is the canary in the mine, right? I heard that we had someone in Yellowknife. You'd know all about that. In fact, I actually know quite a few people in Yellowknife. I was up there for the Christmas festival in that big ice cube igloo 2 years ago. You know what I mean, right? Yeah, look, this is the canary in the mine, and you can see this. Is this all clicking, guys? Is this all making sense? This isn't about telling you that the sky is falling. This also is not about my opinion, because opinions have no place in trading. Rules are what we need. We need rules that give us answers. We don't need people to give us opinions. We need rules to give us answers, right? And sometimes I don't like the answers that the rules give me, but they do tell me what to do. And that's just up to me as to whether I listen to them or not. So that's what the rules are telling us so far. And last but not least, well, almost last but not least, our S&P signal. This is the most powerful of all of the systems I've shown you today. This is by far the best, because this is actually, it gives us then timing down to the day of when to act. And this is an S&P signal that we developed. You won't find this anywhere else in the world. It took us 6 years to develop this. It only works on the S&P 500. And when we launched this 9 years ago now, we back tested this over 60 years, 60, over so 2 signals, I forget the math now, 2 signals per month, so 24 signals over 60 years. It was, 1,440 signals. We back tested this over. It had an accuracy rate of 93% correct in calling directional movement on the S&P. It only works on the S&P. We don't use it for anything else. It is an S&P indicator which gives us timing of major direction shifts. And again, over the last 8 years, it's been correct between 80 and 90% each year. I think over the last 3 years, it's sitting at around 85% at the moment. Still amazing. And so we rely on this heavily, and this is a big part of when we decide to go long or short or go to cash. In 2019, when we broke into that bubble, once again that indicator was another canary in the mine that was screaming trouble, and as you can see, nailed the exact top almost of where the 2020 crash came from. I share you that with you today because we just got that bearish signal on Monday from this signal on the S&P 500. The last time we had that was back in September, and that was when I was telling you about the most recent small pullback that we had. And so when we get these, again, we don't always want to hear that. I'd love to see the market just continue rallying forever. It's great. It's easy to make money on the way up. But when we have rules and systems that we can rely on, it allows us to listen. If we understand them, it allows us to act. And this is a screenshot from one of my brokerage accounts that I just wanted to share with you, because when we get that signal, for example, in September, I can't share today's trades with you because my brokerage account, this one anyway, updates at the end of each business day. But this is in September. I just wanted to show you this. This was me on September 13th when we got that signal, selling everything, right? At the click of a button, sell everything. And that's what rules give you. It gives you the confidence to execute. And I was able to then go in and buy many of these positions back, therefore, about 2.5 weeks later at much cheaper prices. And that's what trading's about, right? Buy low, sell high. And there was one of the shorts we did on the market as well. We bought 9,000 shares of SQQQ, shorting the NASDAQ essentially. On the same day I was selling everything. And that's the ability to be nimble, to be mobile, to follow the smart money, to follow where that high degree of profit, high levels of risk, and that's again trading in a nutshell. Last but not least, the topic of today was meant to be the insiders, so I didn't want to leave you hanging and not talk about the insiders at all, because they do play a role. because this is the last part in the smart money playbook. And if you again, let's go back to 2020. What was happening in the 3 months before the 2020 crash? There was substantial insider selling across every sector. Every sector. Blue is buying, red is selling. You can see here the stark difference between the two. So what did they know? What did the high yield bonds market know? What did the patterns behind the charts know? And what did the insiders know that prompted all of the smart money, all the places where big money is? How did they know to get out before all this happened? Now, I don't think we'll ever have the answer to that question. But whatever they knew spooked them enough to sell this amount of billions of dollars. It was about $13 billion of insider selling just before the 2020 crash. But the chart that then came next was the market crashed and then they bought back in. In fact, they actually bought back in droves. They bought billions of dollars of their own stock 3 days off the lowest the S&P ever got in the 2020 crash. So when the markets and the newspapers were screaming, blood in the streets, again, as you heard earlier, Hugh was talking about, when the market was screaming blood in the streets, the corporate insiders were buying the most amount of shares they had since the 2009 crash. It was a heavy buying day and buying week, and it was at the bottom of a severely, sharply dropping market. And again, so this is one extra piece where when we're putting together this perfect storm, putting together this puzzle, it tells us a story. And when they're all lining up, it tells us what to do. And if you look at what's happened in the last 90 days, again, I'm not going to give you my opinion. I want you to see it for yourself. What does the insider selling over the last 3 months tell you? When you see not just 13 billion like it was before 2020, but here you've got 10, 24, 28, 30 plus billion in the last 90 days, and most of that in the last 30 days, right? About 25 billion of it roughly in the last month. So what do they know? Again, I don't need to wait around to find out in order to take action, right? That's the mistake. If I see every animal in the jungle running in one direction, I'm not going to wait to find out what they're running away from. I'm going to follow them. We'll find out later, right? When we're safe and high on the hilltop. And as one of our other coaches says, I'd prefer to be, on the ground wishing I was 30,000 foot in the air than being 30,000 foot in the air wishing I was on the ground. And that's why we took action 2 weeks ago and this week to protect ourselves, because we didn't know what was going to come. But all of our smart money indicators were indicating something dangerous was in the midst. And today we find out what it was out of South Africa, right? Now, who knows what the impact will be, but that's just one of the catalysts that all the charts were waiting for to occur. I told you I like to talk. I'm just keeping an eye on the time. I think we've got a few minutes over 5 that we can go. I think I believe, but that's it, guys. And this is where then all of the rules tells you what to do, what to trade, and this is where we then switch gears to then run our scan, and look for those most exciting trade setups that suit what the rules are indeed telling us. And this is a much better way than having to cross our fingers and hope and read the headlines and miss opportunities. And if this market does have another sharp drop, which started today, it shouldn't be something that you're terrified of, but something you should be excited about. I mean, you may get an opportunity to buy your favorite stocks back 80% cheaper, right? In the interest of Black Friday, everyone loves a good deal. What if I told you tomorrow that the entire stock market was going to go on sale for 80% off? That would excite you, right? If you're in the right position. It's the same thing that happened with oil. That the 2020 crash created more billionaires than ever in history before. We had our first ever trillionaire created. 2020 made the rich very rich because they acted on it. They knew what to look for. $0 oil was a great example of that. You don't get cheaper than free. And oil was free at one point, right? But how many people got rich off it? I bet you most of us missed it. Why? Right? What held you back from taking advantage of free oil? Perhaps it was because you didn't know which company to buy. And again, this is where rules come into place, where they tell us what to do so we can try and get rid of those emotional, hesitations that get in the way of profitability. So when we saw $0 oil in a bloodbath market, we went straight to our smart money scans and we said, find us the highest probability patterns with huge insider buying. We clicked a button and within seconds we saw TTI. And TTI had 7 directors buying it, 1 director buying as much as 982% more shares in their own company alongside the other 6 directors in the oil and gas area. What happened? Well, after they loaded up as much as 980, that's almost 1,000% increase in someone's individual position that they purchased in that one day. And they were right. Stock went from 92 cents all the way up to 435. We alerted it at 92 cents, and that was a 470% rally. You don't need many of those to change the way your portfolio looks at the end of the year. But that was how we were able to act, because we had confidence that this wasn't going bankrupt, because 7 insiders, there's a typo there, 7 insiders had just loaded up in a really major way. We saw the same on CPE. When oil crashed, we saw CPE at $8.87. 3 insiders put in $3 million, right? Guarantee you they didn't just walk out of a board meeting saying they were about to go bankrupt. Stock went up 1,100%. And CDEV, fast forward, CDEV, we found that at 33 cents. This was my favorite one. This was the one I personally bought. I didn't buy the other 2. I bought a lot of this one at 33 cents because we saw $20 million worth of buying from the VP, director, chief financial officer, and 2 10% owners, and that went up 2,100%. So if we do get a market crash or a correction, this is something that puts you in the position to really bank some exciting money from it, not just from the shorting opportunities that we're finding, and we have some great shorts, some really good ones that we are prepared for, but also, much more importantly, making money on the way back up, because that's where the real big money's made, is buying that deep value. I'm going to have to fast forward to my end of my slide deck here because we've only got 8 minutes or something or so left. But this is what we're about. And so in Black Friday, in the interest of Black Friday, we're doing our best ever smart money trading bundle in the history of Acorn, because I want you to be excited. I want you to take part in this. I really am passionate about this stuff. When our students come to us, they stay with us because this is a system you can learn, no matter what your experience level, no matter how advanced you are. There are things you will learn that is not taught anywhere else. I can guarantee you that. And the Smart Money Ultimate Trading Bundle is where you're going to find it. And the first part is the Smart Money 101 course. This is the foundational course that goes over what I didn't have time to tell you today, right? To dive deeply into what are the highest probability patterns to trade in this market condition. When we bottom out, how are we going to know? What are we looking for from each of those smart money indicators? And all of those smart money indicators inside this course have their own little mini course showing you what to look for in the stocks above the 50-day moving average indicator, what to buy, what to sell, high yield bonds, how to read it, when not to act, how long does it take for the market to crash after high yield bonds gives us a sell signal. The S&P indicator, I mean, the S&P indicator on its own has probably contributed more than anything else that we teach to our success, because it gives us timely, down to the day instruction on when to go long and short in the broader market. All of that's covered in this foundational course. It's on demand. You can do it second you get your login information today. And the final part of that is you even get the scans. The scans that we find these shorts with the perfect patterns and the insiders dumping all their stock. That's what you want to be running right now. You'll get that scan for life. When the market bottoms and we're looking for those $0 oil kind of companies, you know, ones where we've got deep discounts and the insiders loading up, you're going to get that scan too. So at the click of a button, you can find those deep value stocks or the rotten apples that are dropping from the tree at the click of a button. And that's included. That's a $1,997 course included with your package. The smart money alerts, of course, is going to be how you get off to the races right away over this weekend. We'll be sharing with you our new insider alerts here on Sunday. You get 5 alerts every week in video format, written format, and uploaded to the customer portal. So there's 3 ways we send it out to make sure you never miss a single idea. And these are things that you can set up days before the trade even executes, because they're all set and forget, where we're saying exactly what price we're looking for, where we'd sell it at, where our stop loss would be, all based on the patterns, which allows us to often pre-program our trades days, sometimes even weeks before they actually trigger. So on the weekend, you get those 5 ideas, and that allows you to have plenty of time to plan them, program them in. We'll show you how that works if you've never done that before. Really simple, and that's what makes trading fun. It's what allows me to trade in Australia when I'm sleeping, when the market's open most of the time, but still have a full portfolio of positions because all those trades are set and forgot with proper management. You get 5 of those a week, video and in text format, and we've got some juicy ones. Here's one of the ones I'll be talking about tomorrow. This is one of the shorts I'm holding a whole bunch of puts in right now. Look at that double top, 2014 to now, a perfect double top. And this has rallied from $4 to $45. This has a lot of room to drop. It's up 1,000% this year, and the insiders are dumping it. So I've loaded up on puts already. This is just one of the ideas you're going to get this weekend, which I think will easily pay for the course. I'm going to fast forward to the last slide simply because I don't want to take away any time from our next speaker. But to fast forward a little bit here, this is everything that is included in the package. You are going to get the Smart Money 101 course. You're going to get the 3 months of alerts. You have access to our Tuesday and Thursday live trading room, where I teach like this without a time limit, but it's about an hour every Tuesday, Thursday. You have your own one-on-one coaching, and all of the smart money indicators that I've talked to you about today. You'll get the individual lessons on how to use those and how to make those work. One thing that we have never, ever done before, and we will do it only for today, is we are going to give you lifetime access to our smart money market indicators, right? Where you can log into the portal and look at our S&P indicator, look at the high yield bonds indicator, look at the stocks above the 50-day indicator, and our daily commentary on what those are telling us to do. You will get lifetime access to that included in this package. Never, ever done before. That's normally $197 a month to have access to that. You will get lifetime access to those indicators on top of the 3 months alert, on top of the $2,000 trading course, and on top of your one-on-one coaching and trading room for $297. Just think about how much our warnings on the market 2 weeks ago may have saved you today. Is that worth $297? I certainly hope it is. And if you agree with me, put a 1 in the chat box and go to acornwealthcorp.com/value, because that's what this is all about. 1. Awesome. 1, love Acorn. Love you too, Rouse. Yeah, I'm all about value, guys. And this is how we earn your business and get rid of the noise. This is the perfect market to try us out. You won't be disappointed. The $197 a month, what that is the normal monthly fee to have access to the portal for those alerts, the smart money indicators, the high yield bonds, the S&P indicator. that gives us 2 signals a month. That S&P signal, like normally you have to pay $197 a month to get access to those indicators. We're giving you lifetime access to those indicators included in the $297. Yeah, absolutely. You have to do it today, just like a great trade. If the rules are all there, if it looks like a great trade, take it. You got to execute or you miss it. So that's the incentive that I'm giving you today to take action. acornwealthcorp.com/value. Robert says, just finished this course. It is excellent, and this is a great deal. Christopher, so glad I'm a member of Acorn. Awesome. Guys, this will be the first time I think I've ever finished a webinar on time. Oh, one last question. Is it $297 per month after the 3 months? So after the 3 months, it is we grandfather you in at $297 a quarter. That is actually also the best ever rate we've given on our alerts. The best ever price we've done on our quarterly alerts is $397, and that's usually for people who've been with us for a while. So after the 3 months, if you do want to continue on with the alerts and the trading room, remember you'll always have access to the indicators. We're going to give you lifetime access to that. But if you do want to continue on with the alerts and the live trading rooms and the coaching, you'll be grandfathered in at $297 a quarter, which is also the first time ever we have done that. Another big part of this Black Friday offer. I hope that makes sense. Guys, from here in Australia, I hope you've enjoyed today. And again, I'm thrilled for the opportunity to work with you. Have a wonderful rest of your day. And again, the link there to go, punch it right in right now, acornwealthcorp.com/value.